Hi all! In this video, we'll take a look at the tick size compression feature, a unique set of features that help tame the wild markets we are seeing right now. For traders trading highly volatile markets such as the ES and NQ, one of the biggest obstacles they face is price moving way too fast, often out of the visible area of a chart or a DOM, and having constantly to adjust either the chart scale or recenter the DOM. The tick compression is here to fix that. It essentially tames the tiger the market have become since COVID. You can read the same markets in real time but have more time to react to the action due to the tick compression. It does not delay price movements, it's not showing you information late, it's just reducing the visible volatility on the DOM, the charts, and the tape. There will be no more prices jumping out of the top of your DOM, and for traders trading correlated markets, it's a bliss having NQ, YM, and ES side by side, but more on that in a bit. Let's start by looking at the NQ depth and sales first. On the left, we have the NQ with no compression, and on the right, we have an 8-tick compression. You can see the price scale showing a 8-tick interval, and what we are simply doing here is consolidating all orders inside that 8-tick interval into a single price. That means that all market depth, current trades, bid and offer profile, your positions, everything. Looking now at the footprint charts, at the top we have a regular footprint, and at the bottom we have an 8-tick compression chart. We can clearly see the difference between the two and how more readable the compressed version is. To be able to see the full length of the bar on a regular footprint chart, we would need to move the bars up and down like we are doing now, or compress the price scale to a point which would make the numbers unreadable, as you can see. By using the tick compression, we can have a much better overview of the bars. There will be no need to move them up and down, although if your chart is too tight, like we have here, you will obviously need to do some small adjustments. We can see the full bar length. Like the depth and sales, the rules here are the same. We are consolidating all traded volume inside an 8-tick interval into a single price. Before we go into how orders are managed, let's see how correlated markets look like. Here we have ES, YM, and NQ depth and sales, with no compression, 2 ticks, and 4 ticks compression respectively. You can see how much easier it is to read correlation between the three markets without having NQ and YM jumping all over the place, making it really difficult to measure the moves between them. Correlation trading can be used for confirmation, but also to find a lagging market, which is now much easier to see. Let's now dive into the settings and the different modes we have to set tick compression. In terms of settings, all is done within the symbol search window where we have the new tick compression option. We have the tick multiplier here where we select the number of ticks we want to compress, and then we have 3 different modes: up, down, and both. Just notice here, if we open the chart, the both mode is not available. It's only available in the depth and sales in the reconstructed tape. So let's start with the up mode, and we stick with the 4-tick compression on the right depth and sales, and on the left it really doesn't matter which mode we select since none is being used when we have only 1-tick compression. We will be placing the orders on the depth and sales on the left and comparing those orders with the depth and sales on the right. So we start with the up mode, and what this means is that all orders placed on the bid or offer side will be rounded upwards. So if we place an order on the buy side, for example at 40.25, 40 halves, or 40.75s, you can see that all 3 orders were rounded upwards to 41 evens. Or if we place an order on the buy side, for example 40.75, 40 halves, or 40.25s, again all 3 orders were rounded upwards to 41 evens. Let's now switch to down mode, which means that all orders placed on the bid or offer side will be rounded downwards. So if we place an order, for example, at 325, 3 halves, and 375s, you can see that all three orders are rounded downwards to 43 evens. And if you go to the sell side, if you place order at 225, 2 halves, or 275s, you can see that all three orders were again rounded downwards to 42 evens. And now we switch to the last mode, which is both, meaning that all orders placed on the bid side will be rounded downwards, and all orders placed on the offer side will be rounded upwards. If you place an order on the buy side at 25s, halves, and 75s, you can see that all three orders were rounded downwards to 40 evens. And if we place an order on the sell side at 225, 2 half, and 275, you can see that all three orders were now rounded upwards to 43 evens. In summary, tick compression really does help trade more volatile markets. Who knows, in 6 months' time, the pre-COVID liquidity may return, but for now, the compression helps us read markets that would otherwise be unreadable. If you have liked this video, leave a thumbs up, click on the bell to be notified when a new video is uploaded, subscribe to our channel, and we will see you on the next video. Thank you.